I'm Matt Bouchard with REIT.com here in San Francisco for REITWorld 2013. Joining me for this CEO Spotlight is Ed Fritsch, President and CEO of Highwoods Properties. Ed, thanks so much for joining us today.
Thanks for the invite.
Now, your company has undergone a significant refocusing of its portfolio over the last several years. Can you talk a little bit about that strategy? Are you happy with where things are, and is there more work to be done?
Sure, we're happy with it. I think to answer the last part of your question first, we feel like there's no finish line in business, that it's a constant culling process, that you continually look at what you have and the dynamics of the market. So is the market shifting towards downtown or away from downtown? Is there a midtown that's burgeoning? You want to be there. So for us, it's a constant, never-ending process. It's something really that we launched back in 2005 when we put out our strategic plan. So we've changed our portfolio dramatically since then. In the last 3 years, we've been much more active on the acquisition side, but it's supplemented by the development, and we continue to sell. So just this year alone, we've done about $1 billion of activity in total from the development announcements, acquisitions, and dispositions. So we've been active, and we're pleased with it, and still always work to be done given the no finish line mantra.
And picking up on that activity you just talked about, in today's office market, are you seeing more opportunities and or return on investment from acquiring assets or developing new ones?
We've seen it on both fronts. We've been fortunate to be able to identify a number of acquisitions that have been very meaningful to our portfolio under terms which we found to be attractive. But we've also found build-to-suit opportunities where we've been able to put a significant component of our land, our inventory land, into play by doing build-to-suits and expand our synergies within that market. So we've been active really on both ends of that, and I wouldn't choose one over the other. I would just say that it's very important to be contemplative about which you're doing when, so that you're taking advantage of it and not having to choose one versus the other if you can do both and you have the balance sheet to do it.
And now issues in Washington and some ongoing economic uncertainty.
I had to go there, didn't you?
But let's just say it's made things a little difficult for office owners. What's your take on where this is going, and what's your expectations for 2014?
So maybe bifurcate that. So the Washington component of it, I think a lot of people in the business world anyway are disappointed, and probably well beyond that, with what I may call the Washington manufactured hurdles to growth. I think that businesses have done a phenomenal job of punching their way through the hurdles that have been laid before us. So whether it's the sequester, the debt ceiling, or the partial shutdown, or the fiscal cliff, you name it, I think businesses have done a phenomenal job of just punching their way through that and continue to grow despite these obstacles. But I think that it's muffled or suffocated to some degree because of these obstacles that are there and that word uncertainty that we don't like to hear, but it's become prevalent. We thought it would be a fad for a while, and now it's really been here to stay for too many years. As far as how I see 2014, I think 2014 will be another year where businesses will continue to punch their way through some of these government manufactured obstacles. Businesses right now have more cash on their balance sheets than ever. They have the lowest amount of debt than they've had. Credit facilities are mostly untapped. So a lot of synergies are there for the growth to happen. We see good leasing activity. We see no real measurable amount of speculative new development coming online to compete with it. We're able to push rents in certain markets. So we're fairly bullish on 2014, but we still know that there's the next government manufactured obstacle that we'll have to step around.
Ed, thanks so much for joining us today.
Thanks for the invite.
For more on this and other REIT news and analysis, be sure to visit REIT.com.